Cryptocurrency yesterday took a little bit of a tumble to the downside. Kind of shook out a lot of investors and also had a few investors scratching their heads thinking, what on earth is going on? In this video, I'm going to be highlighting a number of things. I'm going to be talking about the result of the CPI data, given that you're watching this video after the release of it, and what we can expect as we go into the open of the New York session. Secondly, I'm going to dive into the idea that has Bitcoin demonstrated itself as a safe haven. What? Safe haven? Going to be diving into that logic very, very shortly. More importantly, I'm going to be diving into what we can expect from Bitcoin, because there's a lot of things happening inside of Bitcoin right now, and everybody's now waiting for the next rally towards the all-time high. So if you are new, welcome to Traders Reality. My name is Tino. Let's have a conversation, man. To get the party started, look what it says. Nasdaq 100 enters bull market. Well, firstly, let's just verify that logic. In front of you is the market search that says that yesterday's price action shows that there were 842 stocks up on volume, followed by 169 stocks down on volume. And breaking out today was 17 stocks and near pivot was 42. This is consistent with bull market behavior. Now, let me just bring your attention to this chart. Now, do you remember me talking about what we need to be witnessing to suggest the idea of a bull market? Bottom right here, you can see that we've got 1, 2, 3 days of accumulation. Out of those 3 days, we've got 2 of them trading above the 50-day average of volume, which is this red line at the bottom here. What is it that we're looking for after? We're looking for a follow-through day, which has actually appeared right here. This amount of volume right here, trading above the 50-day average, tells us that accumulation has been happening from investors. Now, what investors have been doing is they've been coming out of safe havens. Safe havens like Euro. Just go over to Euro a second. Gold. Yen. So what does that mean? Well, hold on a second. Earlier on, I said that gold's price is coming down because investors are coming away from safe havens. So if we just go back to look at Bitcoin's price action yesterday, was this move down was because investors are getting out of Bitcoin because they deemed it to be a safe haven? Well, if gold's price dropped yesterday and gold is deemed as a safe haven, did Bitcoin's price drop yesterday because investors are in Bitcoin as a safe haven? Which means they're going to come out of Bitcoin and go into the stock market, because the stock market yesterday finished positive and it did really well. Managed to keep up in from its loss from the retrace, and then it came straight back up and finished high for the day. Or alternatively, is Bitcoin, or has Bitcoin made this move because this is the last attempt from the bids to buy Bitcoin on what appears to be another breakout pending to the upside? Let's go and have a look at the order flow. First things first, in front of you is the high block. The high block just shows you the liquidation charts, liquidation points. What we've got right here, ladies and gentlemen, is lots of long liquidations and lots of short liquidations. Yesterday's price action on Bitcoin, we noticed that these short liquidations were starting to be really, really thin. So no one was really looking for shorts because Bitcoin was on the move up. Then the Bitcoin drops and then starts to eat the liquidations, and then the short sellers start to come in with conviction that Bitcoin is done and it's not going to go any higher. Look at the concentration of short liquidations up here. The faster they move down, which is what they did yesterday, and they've instantly tried to make a reversal from it, tells us that there are bids inside of this range supporting Bitcoin's price. Going into the order flow, you can see that yesterday and last night in the Asian session, we did have quite a significant amount of bids getting cleared out. So yesterday in New York, we saw 34 million getting picked up at the lows. Then we had all this cluster of bids right here. We had just over 5 million picked up right there. And then another order down here for 2.64 million. Now we've got a little bit of liquidity right here that Bitcoin could be going in for. We've got a few bids down here, but we've got quite a few offers coming into play in the chart. You just saw that 16 million right there on Bitcoin. So the idea is that once the CPI data has come out, given that this video is talking about the idea of it coming out, what we'd be looking for Bitcoin to do is effectively try and show its consistency that it's going to continue higher and not behave like a safe haven. Because if investors have gone to Bitcoin because they deem it as a safe haven, that means if Bitcoin goes down and gold goes down, it means that investors are looking at Bitcoin as a safe haven. That could effectively mean that Bitcoin's going to keep on dropping, because investors are going to go over to the stock market because they want to take on risk again. Why? Well, you've got to look at the fact that your euro is relatively strong. Look at it, 1.11095. I can convert quite a few euros into dollars and get myself some purchasing power. I increase the dollar's purchasing power, and then I can go and get myself stock from NASDAQ, Nvidia, Tesla. Okay? Now, investors are not even in the bonds market. You can see that clear as day. So they're not picking up bonds. However, the yields are trading negative for the day, but they are on a trajectory to trade positive, and they are climbing up. So that means investors have still got an expectation that the future might not be looking so great, so they're not interested in taking on the US debt. Today's CPI data is going to reveal what the likely scenario is moving forward. Now, if the data today comes out and it shows 0.3%, that's in line with estimations. More so, that's exactly where it was not so long ago. If we go and have a look at the inflation data, we haven't been able to get away from this 0.1%. That was the lowest reading on the core CPI. The highest was 0.4%. So you can see prices of the CPI data has been fluctuating. Now, this is the core measure that the Federal Reserve uses to gauge whether or not they're going to be cutting the interest rates. So, scenario 1, it comes in line with 0.3%, so what they expected. Does that change anything? Well, their expectations for interest rates is to still stay high at 4.25, 4.5%. If we get a freak reading and the core data comes in and shows that CPI has come in lower, that means the cost of goods and services is starting to drop. That means inflation is going to then naturally come down. If we then get a reading on the year-on-year inflation and it's less than 2.4%, in my opinion, you'd think that the stock market will be getting ready to explode to the upside, which would then justify why everyone now thinks that the NASDAQ is in a bull market. But we can verify it's in a bull market because we're starting to see the volume, bottom right, is starting to come in from investors because they want to start putting money to work. We've had this aggressive drop down because of the tariffs. The volume's starting to come in now, which tells me that investors are starting to get involved in risk. Now, going over to Bitcoin and cryptocurrency, this is the word on the street, ladies and gentlemen. Everyone's asking why Bitcoin had dropped yesterday. And the article does go on to talk about the fact that Bitcoin and gold were deemed as potentially safe havens. That's how they're trying to make sense of it. Me personally, I do believe that it's just the market's attempt to just bid out and pick up Bitcoin on the cheap, which would be justified by these big orders right here. 34 million picked up on the drop to the downside yesterday. So let's just go with the idea that Bitcoin dropped yesterday because everyone wanted to just quickly buy Bitcoin and no one was really offering Bitcoin's price. Okay? Then we've got this other logic over here. Liquidations. In front of you, you've got the long liquidations down here and the short liquidations up here. Yesterday, we noticed that the short liquidations were very, very few. It was very light. There was not that many concentrated short positions because price was trading higher and people were then in the position to say, you know what, I'm not really liking this. I'm not going to add to this position. I'm going to get ready to close it. And short sellers were effectively waiting to see if Bitcoin was going to top out. Well, the fast move that happened yesterday effectively encouraged more short sellers to come in, thus increasing the concentration of traders who are looking at Bitcoin to go lower. At the same time, the markets effectively swept the liquidity down here, and it has left a little bit behind, which is now forcing retail traders and institutional traders to load up their margins, especially leveraged institutional traders, to load up their margins to protect their positions. But the idea is that Bitcoin is on the trajectory to continue to the upside. Going into other articles like this, you can see it says Bitcoin's realized price signals strong uptrend amid bullish momentum. We go into it and it just starts to talk about this realized price region. And it says that as Bitcoin's price is going up, investors are still buying, even though Bitcoin is at high premiums. So when we look at Bitcoin's price right now, it would be safe to say that this little retrace back down could have been investors' attempt at buying Bitcoin on the cheap because they are in the belief that Bitcoin's price could effectively go out and break the all-time high. Now, the CPI data is going to present that. If the CPI data comes out and it shows that it's in line with estimations of 0.3%, we're neither here nor there. Investors are still going to stick to the idea that the tariff story with China is good news. The market will continue to go up. If the CPI data or core CPI data comes in higher than 0.3%, yeah, we've got a bit of a problem, but investors already expect that the interest rates are going to stay higher anyway because Jerome Powell said that there are downside risks to this story with the tariffs, but he said that before the deal with China came through. Then we've got the other scenario. What if the CPI core month on month comes in lower than 0.3%? Well, that's great news because it means that goods and services are being priced lower. So that's a great sign for the Federal Reserve because they want to see, or should I say, they're in wait and see mode to see how effective the interest rate is going to be at getting inflation down. There's an old saying in the game of trading, which is the slow trend is the true trend. It would be safe to say that this slow trend upwards in the Nasdaq could be the start of a nice rally towards the all-time high because it's not too far away. If the CPI data has come out and the market doesn't like it, naturally, everything is going to reverse from whatever position it's trading from. But we need to try and get into our minds that is the market already pricing in the idea that inflation is going to stay sticky? Well, your expectation of the future ain't looking good with the bonds market because they're trading negative. Look, they're trading downwards, currently trading at 98. Look at the yields market. They're in a trajectory to climb up. That's no good if the yields market is moving higher because investors are demanding more of a rate of return to buy US bonds. On the flip side to that, you can see the volatility index is trading negative and it is at the 19 zone. Logic says that when it's high, you buy. So that means when it's trading above 30, that's when you start buying. But the volatility index itself is starting to present the idea of complacency amongst investors. That means that regardless of the CPI data, in my opinion, investors are still going to be excited about the fact that Trump and China are now best friends. Tariffs have been paused, they haven't been removed. But the yields bonds market are giving us the idea of investors' expectations of the future. So in other words, the stock market doesn't really care about inflation. It doesn't really care about interest rates. It cares more about tariffs. You want the proof of that? Go back and look at what happened when we had our last CPI reading. Came in lower at 2.4%, the stock market dropped. But then again, that was only because the day before, Nasdaq had pumped nearly 12%. But inflation's come down. That means your expectation of interest rates in the future should be lower. Why did you go down? So you can see that there is a disconnect happening when we've got macroeconomic data giving us the breakdown of where we are, economically speaking, with the US. And then you've got the impact of tariffs, whether Trump says we've got a deal or not. And investors are holding on to Donald Trump's every word. Let's make the assumption that the CPI data has come out. And now you're asking yourself, what happens now, Tino? Ideally, we need to see Bitcoin finishing above its 5 EMA. Now, if you haven't got this indicator, just get over to tradersreality.com on the home page. Follow the whole page. Starts off with a video welcoming you to the website. Then it gives you a PDF free of charge for you to download and help you understand how to use this system. To understand the system, get into the Discord, but more importantly, watch this video as it will show you how to download the hybrid system indicator and install it into TradingView. Bitcoin needs to stay above the 5 EMA. Why? Because then it would solidify the idea that the drop from yesterday was the last attempt by the bids to buy Bitcoin to make the reversal. You see, what you've got to understand is this. This big green vector candle block right here, which is one of the strategies that I talk about in the Platinum membership, gives us the idea that if Bitcoin can sustain itself around this high of this block high right here, so that means whatever happens today, if Bitcoin is bouncing around the 103,215, doesn't really make that much of a move, but stays above this range here, the idea is that investors are holding price in this zone to accumulate positions to effectively wait for the next moment where they're going to start offering Bitcoin's price higher so that they can sell it. Remember, when price rises, investors are selling the Bitcoin. All you got to do is look at this. Someone wants to sell 500,000 at 105,000. We go into it. We got some orders right here. Want to sell 7.9 million at 103,782. So those are orders that people want to get sold on Bitcoin. But we need to see information to encourage the investor to step in and be like, okay, it's bull market mode. Well, if the CPI data comes in lower, you've got yourself your confirmed bull market, in my opinion. Why? Because investors will be able to assume that the expectation of interest rates in the future is going to start coming down. So things will be looking good. We've already got good news, guys. US and China have got a deal. What you're looking for is to make sure that if Bitcoin does manage to stay above the 5 EMA, then the next daily candle would then give Bitcoin the freedom to continue to climb higher. We're not far from that all-time high, ladies and gentlemen, and there are a lot of people up here that have the conviction that Bitcoin cannot go into this range. I'm not bullish, I'm not bearish, I'm looking at movement. And if these moving averages show that price can actually stay above the 5 EMA in today's trading, the chances are we're going to be going into what would look like a week's worth of movement to the upside in cryptocurrency, especially Bitcoin. With that being said, ladies and gentlemen, mad love and respect, and I'll tune into you all tomorrow. Peace.